I want to talk about growth. I want to talk about inflation and the G20. Did you come out, first of all, congratulations on the G20. Venezia was beautiful as always. Did you come out of Venice G20 actually feeling a bit more optimistic or a bit more worried about the path forward for the global economy?
Well, yes, it was, first of all, it was a good meeting. I think a lot of results, notwithstanding some criticism which I read recently. But I think the assessment on the recovery was a confirmation of what we expected in April. There is a recovery which is getting pace, but it is not homogeneous across the world. There are a number of countries who are still lagging behind. It is very much dependent on the speed at which vaccination campaign is taking place. It is also less than complete as a recovery. So we think that it will take still about a year before we really are out if a number of conditions take place. One is the obvious, that is the ability of countering a third wave, if you want, of the infections. Then really the pace of demand at the world level has to be maintained as it is. Monetary conditions, financial conditions have to remain favorable, even if we have signs of some price increases that are above the targets that all central banks have set.
So, Governor, we also caught up with the ECB president earlier this week, and we had a conversation about your very important meeting on July 22nd. What exactly do you think will come out of it? Can we see a policy shift after the strategic review?
Well, May 22nd is one of the meetings on monetary policy that we have every 6 weeks. Obviously, it comes after the decisions that we took on the revision of our monetary policy strategy. So it will be seen in that frame. What we are observing now is a situation basically in line with our expectations. There is an agreement that we really have to maintain very favorable financing conditions for a long period. There are two risks that we have to avoid. The first is, or to counter, the first is not making mistakes ourselves. So clearly we have to avoid, say, tapering before the time comes that we are really confident that we are back where we should. And the second is really if there are some exogenous shocks, market developments that would push, say, interest rates on the upside in a situation in which there is still a substantial slack in the economy in the euro area, then we really have to show that we are determined. And we have just said that in our revision of the strategy, that when we are close to the lower bound, which is a level below which interest rates really cannot go without having very negative consequences, then we must have a much more forceful and protracted or monetary policy stance that convince basically the markets of our determination, and that may even imply a moderate and temporary period of higher inflation above the target that we have.
Yeah. So, Governor, given what you've just said, if we look to the autumn, is it likely that we'll need an extension of PEP?
Well, we have not discussed that. And I understand that there are a number of declarations made outside the Governing Council, but this is something that we have to discuss in the Governing Council. As I said before, we need to maintain financing conditions absolutely favorable for the recovery. At the same time, I only want to remind that the PEP was a set of emergency measures that were introduced in March last year, basically to counter the higher volatility, much higher volatility and shocks in a fragmented market condition. And at the same time, however, was also part of the whole strategy of, for us, going back to the aim of 2% in the rate of inflation. We are still behind that below the 2%, even if in the recent months, because of temporary effects, we are close to 2% on average, but our projections are still much below that for the next couple of years. So the stance has to remain. Then we have to discuss
Governor,
how to have it.
Right, and actually we also have to discuss how you then transition from emergency stimulus to a more normal stimulus. How quickly could that happen?
Well, the transition is a complicated thing that we have to discuss among ourselves, but I think that we have really to show to be determined. I think that at the end, it is extremely important the fact that the Governing Council had reached an unanimous approval of the new strategy, and the new strategy sets really the pace. So I don't see a very complicated problem on the monetary side. I see substantial risks on the real side. We still have a substantial economic slack in labor markets. Still have not back where they were before the pandemic started, but I think the determination and at the end also the consensus in the council is pretty important.
But Governor, do you expect policy to actually be normalized or tightened at a further date because of the new mandate that you were just laying out?
I mean, I don't understand what you say.
So in terms of normalizing, do you think that will take place? Yeah, so my question was, do you expect monetary policy to be tightened at a later date? So, you know, more go basically,
as I said,
keep it looser.
No, as I said, I don't expect monetary policy to be tightened for a long period. The issue here is how to avoid really that the market somehow, because of transmission of shocks from other parts of the world, the US clearly is now having a recovery which is much faster than Europe, and the inflation rate is much higher. I mean, we have really to avoid that this takes place in the euro area. And this is what we look with care even in our decisions on the asset purchases and related measures. This is I think rather necessary, and I think we are determined to do that. The exact way, whether through PEP, whether through APP, whether through interventions in the banking sector and so on, is all a set of tools that we have to discuss and agree upon. And this will start the 22nd of this month, but it will continue in September.
Governor, what does moderate overshoot for a transitory period mean to you? Is it a couple of months transitory? Is it a couple of quarters?
Well, this is a question which we have to assess case by case. It has to be put in the perspective of the projections that we will generate over a period of months and quarters and years. As you know, the 2% is a medium-term aim, and therefore we have to extract the signal from the actual data that we will observe. It will be a matter of judgment and a matter of clearly statistical intervention. It may be moderate for some time, which means quarters, which means the projection period that we have. But what has to be very clear is that we are not following a model in which we are going to recover from the losses or from the actual observations of inflation in previous months and making up in the future. We are starting from an initial condition and we will look forward. So once we will be there, we will consider how the projections will look, and then we will judge whether they look moderate and transitory.
Governor, very quickly, I know you worry about variance. What kind of, if we see uglier variants coming, what does that mean for the European recovery, and what does it mean for Italian growth?
Well, I'm worried, obviously, from many issues that worry us. One thing is clearly the pandemic and the way we will have to face another wave if that scenario takes place because of the also behavior that our citizens have. So that may affect confidence. We are in a period in which there is substantial, I'd say, confidence on the part of enterprises. Investment plans are there. They are most likely also taking into account the changes that have been induced by digitalization during these very complicated years. But it will not only be that. There are also the fears of consumers. We have pent-up demand that has to be put back in place, and for the time being, while the saving rates might be slightly going down, are still much higher than they were before the pandemic started. Then there is foreign demand. Since, as I said at the beginning, there is heterogeneity in the way the response to the pandemic is taking place, then for the time being we have a positive view about future developments, but if there are, say, slowdowns in the way the vaccination campaign takes place, then that may affect our economy too.